Kia ora, and welcome to my daily chorus for Tuesday, September the 2nd. I'm Bernard Hickey for the Kaka. It's a podcast and video I produce via my Substack newsletter called the Kaka about Aotearoa's political economy around housing, climate and poverty. The big debate today is around whether the government, and in particular the Prime Minister Christopher Luxon and the Finance Minister Luxon Willis, have respected the independence of the Reserve Bank. This has been brewing now for months, but actually it's been something in the works for 3 years. We have the Reserve Bank Act, set up in 1989, in which the Reserve Bank is legislated to be independent and to target inflation and to be the sole controller of monetary policy, and in effect the sole controller of the economy in the short run. This is a convention that's lasted for 35 years, and New Zealand was actually the pioneer of independent central banks targeting inflation. It's now a convention used all over the world. And for a long time, at least until November 2022, our politicians, our finance ministers, our prime ministers, even opposition leaders were very reluctant to criticise the Reserve Bank's operation of monetary policy, and in particular the people atop the Reserve Bank, for fear they'd been accused of pressuring the Reserve Bank, of reducing its independence. This all goes back to the mid-1980s when Robert Muldoon, the then Prime Minister and Finance Minister at the same time, was able to reject advice from the Reserve Bank about interest rates and for a short period refused to allow the Reserve Bank to open up financial markets for currency trading. This led in the end to the 1989 Reserve Bank Act, which hasn't really been changed that much since then, and is based on the presumption and the legislation that it is independent. That changed in November 2022, when the then opposition leader, Christopher Luxon, and then finance spokeswoman, Luxon Willis, sharply criticised the Reserve Bank then Governor, Adrian Orr, and the then Labour government and Finance Minister Grant Robertson for reappointing Orr in 2022 for a second 5-year term. They believed that the government of the day had a requirement to consult with the opposition and make sure that the opposition agreed to that governor being reappointed. When that didn't happen, they came out and sharply criticised Adrian Orr for his role in so-called money printing and of giving cheap loans to banks, which they say fueled some of the house price inflation and inflation we saw in 2022 and 2023. That's part of the story today. The other part of the story is what's happening with foreign buying. And in my view, the end of phase 1 of what I call fire up house prices, an operation the government needs to achieve to get re-elected. And that's in tandem with getting growth going in the economy. One of the problems the government now has is because it's tied its future and its success to a single metric, growth, now and next year, it effectively is lashed its future to what the Reserve Bank does with the official cash rate. And because the government has not pursued structural reforms, it's basically saying the best thing it can do is help the Reserve Bank to lower interest rates. Now, that all made sense when there was some growth in the first quarter of 2025, and there had been some growth in the last quarter of 2024. But that growth disappeared in the June quarter of 2024, and the government's now under enormous pressure. Having promised at the beginning of the year growth, they now need ever lower interest rates and whatever other levers to be pulled to get both the housing market and the economy going again. So yesterday, the government announced finally the relaxation of the ban on foreign buyers on property here in New Zealand. Now, it's not a complete removal. You have to have an active investor visa, so-called golden visa, to be able to buy a property. It means that you don't have to live in New Zealand. You can be here for as little as a few weeks, as long as you've got this residence visa and you've invested either 5 million in a business, which actually means 5 million in a managed fund that is investing in businesses, or 10 million in government bonds. And you're only allowed to buy one or build one house worth $5 million. And that's the fig leaf that New Zealand First have used to accept this policy, having opposed it for all of the last 18 months or so. This is the end of phase one of this project, given that the government has also convinced, pressured, asked for the Reserve Bank to reverse its tightening of capital requirements for banks. This is important, happened a couple of weeks ago, because it was something that Adrian Orr pushed through in 2019. And the decision to remove the requirement for extra capital has freed up the banks to potentially lend another $175 billion into the housing market. Phase one also included the government shutting down Kaka Ora's new build program, more than 3,000 homes, and that's reflected in also very flat building consents in the last year, and contributed to the loss of more than 15,000 jobs in construction, along with the government's own freezing of investment in big new government capital projects, Three Waters, various transport projects, hospital plans, and of course Kaka Ora. And we've seen the end of the once bipartisan medium density residential standards, albeit softened by Chris Bishop's requirement that in Auckland at least there be high density homes around major train and bus routes. This golden visa detail came through yesterday, and it means that upwards of 300 homes are at issue here. There were between 200 and 400 homes sold in the last 5 years for more than 5 million. And there's been about 300 applicants for this active investor visa. So a significant amount of money, but not as much as National might have hoped with their proposal before the election that people would be allowed to buy homes for more than 2 million. And if you look at the houses currently valued at more than 5 million in Auckland, is about 3,320. Interestingly, just 39 in Wellington, just the same number as in Hawke's Bay. And there'll be an interesting question about whether lifestyle blocks are considered part of this project. As you can see there, building consents flat as a pancake since the election. Now, this debate about Reserve Bank independence is really heating up. A good column today in the New Zealand Herald. I've got a link with the earlier picks and mixes, essentially arguing that the government contributed to the confusion around the reason for Adrian Orr's departure by allowing Neil Quigley to not tell everyone completely what happened on the day. That picture there is from that actual press conference. It's clear he knew that Adrian Orr not only was resigning because of a dispute over the government's cutting of the Reserve Bank's funding, but also that he'd actually left as Reserve Bank governor several days earlier, and the government and the Reserve Bank didn't have a Reserve Bank governor, and the public didn't know about it. And when it became clear that all of this was the case and that Quigley had obfuscated at best, he was thrown under the bus late on Friday night in an announcement directly from the government, not from the Reserve Bank. This is now challenging this convention about independence for the government. The next step, phase two, if you like, in get house prices going, is the Reserve Bank's ability to hold the LVRs and DTIs where they are. It's very interesting that I think one of the most important appointments from Luxon Willis so far this year was the appointment of Grant Spencer, a former Deputy Governor of the Reserve Bank and Acting Governor of the Reserve Bank, as a Director of the Reserve Bank. The way is now clear for him to be appointed Chair. And it has to be remembered that one of his major acts when he was acting governor briefly in 2017 was to ease the LVRs. And he's certainly the most qualified to be the chair of the Reserve Bank. I'm Bernard Hickey. That was today's Daily Chorus for Tuesday, September the 2nd.